Yo, what's up guys, it's your host man and welcome to my channel. If you are new here, kindly like the video, subscribe to the channel and turn on notification for more video like this and as well for more content like this. So here, thanks for doing that and let's do more together. Welcome to the family. So if you have been around my channel, you know my channel is centered around how you can actually leverage on MSNR levels and CRT candlestick to maximize your profit in trading. So here, I'm not here to sell you dreams, so I'm just here to walk you through the physical and the practical experience of trading. So please grab a pen, grab a note and grab some popcorn because it's about to get interesting. So today's video is just going to be around how you can actually see an invalid CRT, like what exactly is an invalid CRT and why CRT fails in one word. So why CRT fails in one word? What exactly are you marking wrong? So there are some situations that you've marked your accumulation, your manipulation, but it fails to distribute. Where exactly went wrong? Like you've seen your range, you've seen your structure, you've marked them all of them out, but it's still failing. You are still eating that losses back to back. So where exactly is wrong and where exactly might went wrong? So here, like I said, grab a seat and grab some notes because it's about to get interesting. So let's get straight to the video and let's explore. So what I mean here is that, okay, before you mark a CRT candlestick, you know we have a CRT candlestick has to start. A CRT has to start with a range, right? So the accumulation phase has to be a range that we are trying to take out the high or the low. Then we go for the external high or the external low, right? So what exactly am I saying here? Let me show you what I mean. So before you even mark any CRT structures or any CRT narrative, you have to understand that it has to align with the structure of the trend. Are you bullish? Are you bearish? Are you ranging? These are the questions you ask yourself. Because these are the questions you answer first before you even mark your CRT. There is no how you mark your CRT. There's always CRT for every direction and by every direction of the market. So if you mark your CRT as a bullish CRT and the overall trend is bearish, trust me, you can only be guaranteed the 50% level of the CRT. That's even when it's going to work. If it's not going to work, the SL is going to just be very loud. So here, let's just get straight to it. First and foremost, you have to understand that you have to mark CRT that aligns with the structure of the market. So this is why I said anything that you trade, you have to understand market structure first and foremost. So you see, you have to understand that, okay, are we bullish, are we bearish, where exactly are we coming from on our market? So let's say the overall trend is actually bullish and we have something like this. We are trading towards the upside of the market and we have more like series of highs and higher highs, higher lows and higher highs, something like this. So this is exactly what we had to the upside, right? So now you now have a CRT that aligns with this particular structure of the market, right? So you have a CRT that aligns with the structure of the market. You know, a CRT has to be a range candle first before we have the manipulation of the high or the low, right? So that's something like this. So let's turn this candle to be a black color so we can actually have a proper drawing for that. So we have something of this nature here. We still move into the chart for a proper explanation here, but this is more like the framework of what I was explaining. So we have something like this, and here let's add this visual level a low here, a bit above this. So for this to happen here, you have to have this CRT as the CRT low, this candlestick this week as CRT low, and we have this high as our CRT high. There's CRT high. So you have something like this. So here there's another saying, there's another icing on the on the cake of CRT. Like the longer your week, the the more opportunities for your entries, because not until that CRT narrative is fulfilled, you still look for more entries to take the to that external high out. So the longer your week, the more opportunities for your entries. So you've seen your CRT and it has aligned with the trend. So what exactly are you now waiting for? You're either waiting for the manipulation of the CRT high or the CRT low, whichever comes first. But for the bullish structure, you have to understand that you need to understand that the low has to go first before you go for the high, because you cannot be bullish and you now be looking for this high coming, for this particular high to go first, then you now be looking for the sells. No, you are bullish in structure, right? So you have to understand that you need to go for this low first. This low has to go, then you go for the high. That's exactly how the logic actually works. But here, let's clear that and let's get straight to the video. So you've seen your CRT structure, and what exactly are you looking for? You're looking for a manipulative candlestick here. So this is more like the manipulation here. Coming, let's make it a white color, whatever. So here we have something like this, and we took out, oh, that's coming. So we took out this low, trying to make sure that you have equal size. Okay, yeah. So let's bring this ball forward. So you took out the low, right? You took out this low to the upside, and basically you are looking for more buys to the upside, right? You're looking for more buys like this, wherever, to the upside. So what exactly went? If you go on the fractal structure, you see you're looking for maybe a CISD. What do I mean? Like you have a total soup of the previous low, or be something of this nature. Then you have a CISD to the upside, maybe an imbalance model or a model 1 entry to the upside, and you complete the CRT range. That's exactly what it looks like on a fractal structure. But here, that's not even why we are here. Why we are here is that why does it fail? Why does it fail? So first and foremost, you need to understand this, right? You see, this candlestick is much more important to whatever you're marking it. It plays significant role in your CRT structure. You have to ensure this. Please note this. You have to ensure the rejection of this candlestick is not from an resistant level on a higher time frame. What do I mean? The rejection of this week here, this candlestick is not from a left hand side chart rejection, resistance rejection on a higher time frame. What do I mean? If this is an A-shaped key level resistance, that key level is not going to hold. If this key level is an A-shaped key level resistance, that CRT structure is not going to hold. This tightness is not going to hold. Even when it's going to hold, it's just going to give you that 50% level fulfillment of the CRT structure. Then it starts to dump against the downside. So always ensure that this is not a rejection of an higher time frame level, right? Because what is going to happen is that it's going to just use you to create another storyline for more sales to downside. So always ensure this is not a rejection from a higher time frame, right? For that what's it called? For that key level, for that key level. So for a CRT structure to be very much valid, always ensure that CRT range is that CRT candlestick range. The first accumulation candlestick is not a rejection from an higher time frame resistance zone if you are buying, and if you are selling, vice versa. So here it's much more advisable if you are trading this kind of CRT, you are trading to a particular range, is much more advisable than you trading a rejection, right? What do I mean? So if your candlestick, if you have something like this, like a higher shape level like this, and you have a CRT structure below the before you see the range, before you see this A-shaped level, right? So it is much more advisable this way. You trade something like this, come in, something like this, then you go for the high, then you say okay, you now have the A-shaped level, you anticipate more sales to downside, right? This is much more advisable than the previous one. So another thing that you need to pay attention to is this. So the first thing is that you need to understand that your CRT has to align with your structure. Secondly, you have to understand that you don't need to trade CRT range, that you don't need to buy a resistant CRT structure. Yeah, I mean, I believe that one works. You are not expected to buy a resistant CRT structure in this regard, something of this nature, right? So another thing is that, okay, for a CRT to should be very much more solid, rather, you have to see that, okay, we add this structure, we add a structure, let me try to reduce we add a structure right here, and if you've seen a candlestick, right, that trade above the CRT range, but we are now left to fill the wick, trust me, the rest of the re-entries are going to be very much sweet. What do I mean? If you've seen a candlestick that's already traded above this wick right here, this candlestick eye rather here, and it's closed above, so the rest of the re-entries are going to just be smooth. So these are the perfect continuation setup you look for, right? These are the perfect condition for you to look for more continuation setup to the upside. So I will show you what's it called, I will show you the whole experience on the chart. So here, please pay attention. So this is this high. If you already have a candlestick that closed above that high, trust me, these are the perfect CRT structures you look for as continuation entries. So yeah, to cut the long story short, let's just go straight to the chart and see what we're talking about. So this is let me clear all of this drawing and let's check it out. So this is sorry sorry please. So this is UK 100. We are using UK 100 for today's example on chart. So CRT is always everywhere. Like you see them on your chart for directional buyers on a higher time frame. They are very very valid. Like when you see them, you see, okay, this is very much valid. So let's just take a look at them and right from the start of the UK 100, because they are almost everywhere on UK 100. Like I can see, as I'm speaking with you now, I can just see a couple of them here. So here, let's start from here. Let's and let's mark CRT structures out ourselves. So you can see we had what's it called? We had more like an area resistance broken to support right here. So it's more like an A-shaped level with a single rejection and still overlaps and imbalance subconsciously. So we had a CRT low right here, right? We had a CRT low right here, and we had a CRT right here. This is more like a classic CRT. Does it fulfill the criteria of the CRT we're looking for? Yeah, it fulfills. Why? Because it aligns this trend, it aligns the structural trend first and foremost, and secondly, this A-shaped key level is not rejection from any A-shaped key level on left hand side of the chart. Yeah, you see. So we add something like this. So it's much more convenient to trade this kind of CRT to the upside and see what price actually did. Price gave us a range, manipulated the low, and give us a re-entry from that shape level created by this, and see what we did. We fulfilled the CRT range to the upside. That same stuff that happened right here also happened right here again. So this is an open close key level again. Coming, this is what's going on here. This is an open close key level again right here. What exactly went wrong? So this is an upper close key level. I don't know why this is season. So this is an upper close key level right here. Let me show you what I mean. So this is an upper close key level we can actually use again. So upper close key level right there, we still saw a CRT structure again. So this is what I mean. So it still aligns the structure of the market, and this eye is not a, what's it called, is not a resistance zone, like it's a resistance zone rejection, so we can still look for more buys. And like I said the fact that we had a very long week gives us more re-entries, was opportunities to take the CRT eye out, right? Take a look at that. So that being said, see what happened right there and see how we continue to have much more range to the upside, even though this is not a proper CRT, but here we have more like an RBS here, and this is more like a range low, and this is a range high again. We took out this low, right, and this is more like the range high again, also more like a CRT candlestick, but it's CRT in a two candlestick format. See what happened right there. So this thing is actually not what's it called, just framed work or something here. They just happen here all on your chart, like you see them frequently. So even here we have the same stuff happen right here. This is more like an imbalance model. We have the CRT low right here, and this is the overall CRT high we're dealing with right here. Take a look at this eye. So I'll show you when it fails and why I said you need to pay attention to them. So why when it fails. So take a look at it. So I have more like a resistance zone here and RBS zone again here for more buys again to the upside. So all of these things are not just random, they work, like they work. Even though here for more consistency to the upside, we add more like a CRT range right here, like a low, and we add these eyes. This is like this last eye that we add, the immediate eye that we add. So this is more like an imbalance model for a CRT. See what happened right here. So speaking of that, you see, even though here, even another one right here, we had more like a V-shaped key level right here, for a strong one because it has support the previous low, and see what happened right here. We had this V-shaped key level right here, and we had the CRT structure right here, more like a CRT low right there, and see what we did. We fulfilled the CRT narrative again to the upside. Just take a look at that. So all of these things are not just random. If they are random, they will not repeat itself like concurrently actually. So even that, see what we did right here again. We did like here more like a inside CRT structure again. So this is a V-shaped level, and this is CRT low. Let me try to increase my well here. We had a CRT low right here, and we also had a CRT high fulfillment right here. So take a look at this. So all of these things are not just random, they happen for a reason. So why does it fail? That's the question. You've seen that, okay, we saw it aligns with the structure. We've seen all of this, how to trade CRT to a particular level, you have to avoid rejection. But why does it fail? So let me show you the scenario of when it fails as well. So here, let's clear up this drawing and let's see what we had. So take a look at this on a monthly time frame. Take a look at what happened right here. On a monthly time frame, see what happened. We add this on a monthly time frame. We had this rejection on a monthly time frame. So see what happened right here on a monthly time frame. That's the perfect rejection on a monthly time frame. We fail to close above the high. Like the first candle, the last monthly candle fails to close above the high. Second candle still opens and still trade below, right? So here, what do we now have? So we now have something very much more crucial on a daily time frame right here. Let me show you. Daily time frame. Let me show you on a daily time frame. So on a monthly time frame, this is the key level we are trying to trade. I don't know why this is here on a daily time frame. This is the key level. This is the rejection we marked out on the monthly time frame where it's still very much valid. But here, take a look at what happened right here. So what happened right here is this. If you have to mark your key level, if you have to mark your CRT structure, you will have said, okay, this is a valid CRT structure that happen like this. So this is more like an upper close key level CRT structure. We add, we add a low like this. We add a low like that, and now we add an high like this. We fulfill this immediate CRT structure to the upside, right? In which we fail to create another break of structure above the high. We only fulfill the CRT structure, we could not break above the high to the upside, which is more like the first thing we need to see as a red flag, right? We broke the high, like we fulfilled the CRT structure, but we failed to break the high with the body of the candlestick, right? So take a look at this, more like we swept that previous high and see what happened. So after that, we had another CRT structure in between this. So if you are to mark this out without neglecting this rejection that happened right here, neglecting this rejection that happened right here, you'll say, okay, we had this like another CRT structure right here, and here this is another CRT structure I that happened right here, right? So speaking of that, if you have forgotten that, okay, this has already just swept this high, so this is another rejection that happened right here, and you're looking for more lows. But here, let's just take a look at this as much more bullish structure. But take a look at what happened here. What happened is very, very much more convenient. We need to understand this. So see what happened here is that, okay, we've seen that, okay, we had this. Then you marking this key level as a CRT low, right? Sorry, as a V-shaped key level, as a V-shaped key level for that buys, right? See what price, the price came here, give us a reaction to the upside a bit and start dumping to the downside. But why does that happen? Why did CRT actually fails? Why does it fails? It's because you fail to forget that this rejection right time frame is here, right here, and see what happened right here. So what happened right here? Price traded below here and used that more levels for some more sales to downside. And also here, subconsciously you fail to forget that we're gonna have a proper break of structure above the high after we had a CRT structure that was formed. So instead we will just add what's it called, a sweep of this high, and here, you know, when a buy side liquidity has been taken, you go for the sell side liquidity, and when the sell side liquidity has been taken, you go for the buy side liquidity, and vice versa. That's exactly how it works, something like this. So the new range has been created already. We take out this high, then this becomes a low. See what price actually did, and we add more sales to downside. And also here, if you pay close attention, you see that, okay, we already had a proper sales to downside because we swept this high, and this HAP level was used again for more sales to downside. So take a look at that. So all of these things are not just random, they are very, very important. You need to pay attention to how price actually react to key levels and what exactly is going on and what exactly do you need to do. So all of these things are not just something you just, okay, let me just say, okay, if it's going to work or it's not going to work. You have to be very meticulous about how you mark your key levels and whatever analysis you are making as regards your POIs. So take a look at that. So let's take a look at this on a weekly time frame and see what it looks like. So on a weekly time frame, I believe you see what I'm saying, right? See that rejection right here as well. So price give fail to take that last high and see what price is just created and started dumping. So even on the money time frame, see what happened. So you have to understand that this structure are very, very important if you are trying to trade them. Like if you mark the CRT structure, but why is it failing? That's the question. Always pay attention to your rejection on your time frame. Now, what exactly? Because higher time frame is much more stronger than lower time frame. So you cannot say, okay, because monthly is rejecting key level is rejecting from a monthly, but you have a CRT on a weekly, then it's going to hold. No, this item is not going to hold. Weekly is not, monthly is just going to be there and be looking and say, okay, here, let's say the CRT is going to just form above me, and let's see. So let's always pay attention to how we mark our key levels and how we mark our CRT structures. And let's take a look at this as well. Let's look for more example of CRT that fails as well. CRT that fails, CRT that fails, that fails, that fails, that fails, that fails, that fails. So take a look at what happened right here as well. You see that, okay, we had a proper CRT structure and we had more like a range structure, but this on day time frame. Let's go maybe a weekly time frame again. Let's say, so weekly time frame will show us more example right here as well. So even like QQ100 is much more better for CRT, to be very honest. I'm just discovering the pair, like I'm just because take a look at this as well, like more like if you should level more CRT, whatever. And this is all of this structure actually aligns the structure, like they aligns the trend, because I would have said this is a rejection, but here this is a breakout, not a rejection. So it's a breakout, price break above that key level above the high, impossible. So now this is a perfect example of what I was talking about in the other time. So take a look at this. So we add a structure, a V-shaped key level right here. This is a V-shaped key level right here. So we add a V-shaped key level right here, and price, what did price did? Price directed from the V-shaped key level, and price had a CRT low right here, and a CRT high right here, right? The first one you're talking about. So price even give us more assurance of it holding. What do I mean? So take a look at this. After price take out the CRT low, it gave us a breakout right here. So this is a breakout to the upside, right? So price give us an assurance, okay, I took out the low, I manipulated the CRT low, and I still give you a breakout. This is much more important than the rejection from that level. So after that, what do you see? price break above it and still give us more re-entries. So this is more like a bishop level again on daytime, on a weekly time frame, for more CRT buys. This is under CRT, inside CRT, then you take out that last eye against the upside. Always pay attention to where your candlestick actually form, and always see that okay, your structure are intact. So moral of the lesson and the summary of these lessons: for you to mark your CRT, always ensure first and foremost they align with the structure of the trend. Secondly, you avoid trading a rejection of a CRT candlestick bar. And also thirdly, you have to understand that your CRT is much more important than your structure, right? So here, I believe you've learned one or two things from this particular video, and if you've already helped you rather in one way or the other, do also give a like, subscribe to the channel, and share to your friends and family so they can actually learn. Also, if you are new here also on my channel, do well to go on my previous videos so you can actually let us learn more about CRT and how they works. So thanks for staying to the end of the video, and I believe this works. And if this works for you, drop a comment, and here let's learn from your lesson. Thanks for having me. It's your host Tama once again, and have a great day. Bye.